Today we're talking about Intel, ticker symbol INTC. It's one of the most iconic names in the semiconductor world. You've seen the sticker logo in most of the computers. It's been there for a while. It is very famous in a way that it has been there for a long time. And what's interesting about Intel right now is it's not just a legacy chip company anymore. It's trying to reinvent itself. It's trying to push itself into the AI chip manufacturing world, try to compete with NVDA, AMD, all other competitive semiconductor race. Although some investors even seen that it's backed by government story because the US has been heavily focused on bringing more chip production back home to the States. So if the government has a hand in this company, should we also buy it too? It looks like Intel is not just another stock, another chip company. It's part of a larger technology and nation strategy conversation now. If the US is an investor of Intel, is it safe for us to invest too? Let's break it down. Looking at Intel 3 months outlook, where to buy and where to take profit for the near term? Well, first let's decide if it's even a buy or not. Then we look at the technicals. The fundamentals might say different things about the technicals. 4 PE, which is like the regular PE but forward looking. It is how expensive the stock looks based on the future earnings. It is around 125, so it is extremely expensive. Just for comparison, NVIDIA is around 20, okay? So Intel 4P is 125. That gives you a clue of where it should be at. Free cash flow, it's at negative 3 billion. The company doesn't have free cash yet, so where is it? I mean, there's a lot of things going on, but that's a little bit of a red flag versus other chip company. They have a lot of free cash. They can do research, they can deploy it, new factories, everything. So put a question mark on it. Revenue growth, it's how much a company's sales have been increased over time. We want the company to keep growing. It's very slow, but that's a good thing. It is growing. PEG ratio, price earning to growth ratio, it is like the regular PE ratio, but add a growth factor to the formula. So it shows whether a stock is cheap or expensive relative to how fast it's growing. It's running at 1.7%. So PEG ratio around 1 is fair value. PE matches the growth rate. Less than 1 is undervalue, which is a good growth at a low price, which is a discount for us investors. Greater than 1 is overvalue. That means we're paying for a premium, okay? So right now it's at 1.7%. It is a little bit overvalued. ROE, return on equity, it is how profit a company makes for every dollar that shareholders invest. It is how efficient the company is generating money for us investors. We want the company to be very efficient. It is at negative 3%. It is not returning any profit for us investors. Compared to NVIDIA, which is above 20, that's a very good number. It's generating very efficiently for us. The company is very good at making money. So you can see the fundamentals have mixed signals. That's not a good sign, plus some good signs. So let's look at the technicals. Does it tell a different story? As you can see, it's running well above the 200 SMA, very close to all-time high. That means if you do want to buy, wait for it to come down a little bit. I would say buy around 70. This is a very conservative number. Maybe you will say, well, it would never come down there, but that's a very conservative and good price number if you ever want to take a share at Intel. And if you do get in, take profit at 140, which is the all-time high, because we don't know if it's going to blast through or hit it and come back down. Cut loose at below 55-ish. If it ever come down and touch the 200 SMA, we want to watch what it's doing over here. We don't just want to panic sell. We want to wait and watch what is its reaction around here. Is the buyer going to step in and it's going to go up from there, or is the seller going to step in and push it lower? So keep an eye on this area. Cut loose point would be under 55-ish, because when it goes lower, it might stay down lower for a long time. When to add, where to add, would be around 80 to 100. This would be a good area to add some more shares because it's not too close to the support and it's not too far from the take profit. The reason I say 3 months outlook is because nobody knows what's going to happen in the near future. Especially Intel is a tricky business. Any news, government related news, will fluctuate the price of the stock. So take profit while you can and be ready to cut loose if it doesn't look good. Lastly, important dates for Intel. July 23rd is its earning. Expected move is 21%. Well, what do you think? Do you think it's gonna report a good number and then blast through all-time high and maybe go to 150 and beyond? Or is it gonna come back down and test the 200 SMA support? It could go either way. That's it. Thank you for watching. I'll see you next time.